Let's get right into it. We've all seen the ads, software that promises AI trading bot. Diving into AI trading bots felt overwhelming, hundreds of options, all promising the best results. As a non-coder, I focused on beginner-friendly platforms with pre-configured strategies. I filtered out anything requiring scripts or deep technical knowledge. After research, I chose a bot known for its user-friendly interface and a strategy called grid trading. The bot connects securely to major crypto exchanges via API. No withdrawal permissions, just trading. The dashboard was clean, performance metrics clear, and pricing transparent. Setup was simple. Create accounts, link via API, choose a trading pair, I picked ETH/USDT, and allocate my $5,000. I selected a conservative, pre-built grid trading strategy and activated the bot. Grid trading works by placing buy orders below and sell orders above the current price, profiting from volatility. The bot buys low, sells high, automatically and relentlessly. No need for me to watch charts or react emotionally. The whole process, from research to launch, took just an afternoon. This was the perfect hands-off experiment. The first days were a mix of excitement and anxiety. I kept checking the dashboard as the bot made its first trades. Profits were small but consistent, appearing with every completed buy-sell cycle. The income felt truly passive. After setup, I did nothing. The bot worked while I slept, worked or hit the gym. No charts, no news, no gut feelings. But then, the market dipped sharply. The bot kept buying as prices fell and my portfolio dropped. My instinct was to intervene, but I stuck to the hands-off rule. The bot was designed to buy during dips, waiting for a recovery. Sure enough, as the market rebounded, the bot sold for profit. This was a powerful lesson in emotional discipline. Had I intervened, I'd have likely sold at a loss. The bot's unemotional approach turned a scary dip into a win. The first 2 weeks summed up the experience, gains, fear, and validation of a disciplined, automated strategy. After 30 days, it was time for results. Starting with $5,000, the bot generated $437.50 in profit, about $14.58 per day. Not life-changing, but impressive for passive income. The bot executed 212 trades with a 96.7% win rate. Most trades were small, consistent wins, classic grid trading. My total time investment, about 3 hours for setup, then 5 minutes a day to check in. The monthly return was 8.75%, an eye-popping figure if annualized. There were a few losing trades, but risk management kept losses small. Sometimes the portfolio value dipped due to unrealized losses, but closed trades kept stacking up profits. The experiment proved automation income is possible with the right tools and strategy. The bot beat the market, at least for this month. The final numbers gave a clear answer to my original question. This experiment taught me more than just So, what's the final recap? The experiment was a success. The bot turned $5,000 into $5,437.50 in a month, with a 96.7% win rate, completely hands-off. The technology delivered on its promise of passive income through disciplined automation. If you're considering AI trading, start small and never risk more than you can lose. Diversify your assets and strategies. Don't put all your eggs in one basket. Reinvest profits to harness compounding. Always prioritize risk management. This experiment changed my view on technology and finance. Automated trading can be a powerful addition to your portfolio, but it's not a replacement for human judgment. The future of investing is likely a hybrid, human strategy, AI execution. Now, I want to hear from you. Would you trust an AI with your money? Would you let a robot take the wheel? Let me know in the comments, would you do it and why or why not?